Performance-wise, it has outperformed S&P 500 in different market regimes. It has been very stable. It has been awarded five-star ranking by Morningstar. A lot of institutions have started investing using this ETF to create the products for their retirement products as well. As we grow, we keep pushing the benefit to the investors. I have not seen, even during the height of COVID, when you would expect the liquidity to completely dry up, the trading to dry up. But even in those times, there was no dislocation which we detected in the secondary market for these ETFs, which were existing at that time.
Assalamu alaikum. Today we have with us the president of SP Funds, Irfan Chaudhry, and we are incredibly honored to have him on our podcast. Recently, the SP Funds released their SPTE ETF, their technology ETF. We all know very well the SPUS ETF, the very popular ETF that tracks the S&P 500's Sharia exclusion index, and that has received, I believe, a very high rating from Morningstar as well. So we're very excited about how things are shaping up. And thank you, Brother Irfan, for joining the podcast. I would love to have you introduce yourself and the SP Funds to our audience.
Thank you very much, Faraz, and it's a privilege to be with you and through you to be able to communicate with a lot of potential investors as well as your audience as well. So, as you indicated, SP Funds, we first to give you a little bit of my background. I have more than 25 years of experience in the investment management industry. I worked in Dubai for more than 10 years as a strategist for a funded bank there, and I've been involved in as a direct investment for the pension funds, world a defined benefit pension fund. So yeah, in 2019, Noshad Virji started SP Funds. He was a pioneer here, and just to give a background of SP Funds, it's basically driven by the need to fill a niche for the Sharia compliant investors who can really hone on into kind of to fill the spaces there where some of to provide those tools which were lacking. And part of that was the Sharia portfolios, wealth management, wealth managers. They saw that need for the investors there who wanted to have a exchange trade products there. So that's the primary motivation there. There was a need for, and there were not many exchange trade funds available at that time in 2019. Lately, I know there have been some additions from some of the other organizations here as well in this space. But at that time in 2019, I think there were not many Sharia compliant funds out there, ETFs. So that's where we started from. And obviously, as you said, that SPUS was the first ETF, which is makes sense. We wanted to have a broad market ETF, which investors could use for their portfolio management purpose, even if they're doing it themselves, because there's a lot of focus shift away from active towards passive management, and then providing the tools to the investors directly as well. The ones which do not want to get into the active management side, they can still just trade a broad market, take a broad market exposure through exchange traded product. So SPUS was the first product. We worked with the S&P Dow Jones team and modified the index a little bit. And then this the industry S&P, the 500 Sharia industry exclusions index, which we follow a definition of IOFI there to screen the stocks according to IOFI. So that was the first product. It's done very well, alhamdulillah. Like its performance wise, it has outperformed S&P 500 in different market regimes. And we have seen in the last, since the time we launched this product, we've seen like upswings, downswings, COVID time when there was a deep dive down, the interest rate cycles, hike cycles. So in all these environments, SPUS has done better compared to the broad market indexes, and even compared to some of the competition out there in the market as well. Year to date, I think it's far outstripping S&P 500. Fee wise, it's a very competitive fee compared to most of the other ETFs who are available there. then it has been awarded, it's very stable. It has been awarded 5-star ranking by Morningstar. So essentially, like a lot of institutions have started investing using this ETF to create the products for their retirement products as well for employees and offering them to the broader public as well. So which is a vote of confidence in this ETF as well. The second one we launched was SPSK, which is Sukuk ETF. Sukuk is a very particular market because it's less liquid compared to the treasuries market. Sukuks are, someone who does not know, they are Islamic Sharia compliant fixed income instruments, which are comparable to bonds, although they have a profit loss sharing formula there and collateralized as well. So in different environments, again, in the whole of the fixed income space, compared to the broad market treasuries, emerging market sovereign bonds, emerging market corporate bonds, SPSK has performed better than most of these subsectors of fixed income. So essentially, yeah, it has been affected by the interest rate hikes because fixed income, most of the fixed income is inversely proportional. Their price moves opposite to the interest rate rises. So obviously but it has been less affected compared to the treasuries, and it has been less affected compared to the corporates bonds, and it has been less affected compared to emerging market sovereigns as well, like even compared to Russia and whatnot. So that's the second product we launched, was to give if any investor who wants to do a 60-40 portfolio themselves, 60 equity, 40, that's a typical balanced portfolio. So second instrument obviously had to be a fixed income one. That's we provided. We reduced the fees for both these products effective December 1st. And as we grow, we keep pushing the benefit to the investors basically in both these. Third one is real estate one, and SPRE, which is a REIT ETF, and again affected by the downturn in the real estate market overall, commercial real estate. But it has a wonderful recovery. I think in the last 2-3 months, it has been best performing ETF across the Sharia Compliant ETFs spectrum.
Right.
These were the three original ETFs. Then the global technology ETFs. A lot of investors were asking us to provide them with a growth instrument. We had it. SPUS has a slight growth stage, but it's a broad market instrument which covers all the sectors. So technology itself, across all the sectors, innovation is a key engine of growth, which creates long-term wealth, and this offers a unique growth up exposure with a unique risk profile if someone invests in a rapidly evolving areas of the economy, such as e-commerce, cloud computing, healthcare, genes editing, gene splicing, e-commerce, and any other sectors. Most of the sectors, they have a technology complement right now, and I think that's a opportunity for the growthy investors who wants to invest in a Sharia compliant growth ETF. This is the only global technology ETF which is available in the Sharia compliant space. Obviously, there are non-Sharia compliant ETFs out there, but Sharia compliant ETF, this is the only one which is available. There are 5 platforms of growth. Basically, if I would say that, there are 99 components in this ETF. SPTE is the ticker symbol. It trades on New York Stock Exchange, and around 99 securities, their stocks, which represents 5 engines of global electronic commerce, genomic advances, smart machines like IoT, and then new finance, which includes obviously exchanges, blockchain, and virtual currencies, and some of the related companies which are involved in that business. Then finally, exponential data, which is artificial intelligence and machine learning data, and augmented and virtual reality companies there. I know US had been a key engine of the global growth, and that global technology, but lately we have seen some shift actually, especially in the foundry companies, like they're called chip manufacturing companies.
Right.
They have been moving out of US to the global side. So it makes sense to kind of like having a sense that it could offer a global technology share compliant ETF to the investing public.
So the SPTE is not focused on US market, so it's like it has all these um tech tech companies, like as you're rightly mentioning about semiconductor chip manufacturing. These are mainly outside the US, so it includes those companies as well.
It's structured in such a way that the country exposure is capped at 50%. So essentially, still there are U.S. companies there, but it has also the global companies. So a minimum of 50% has to be the global companies in this ETF.
Nice. Okay. That's interesting, very interesting. Now, obviously, these are very exciting times. Muslim investors didn't have these kind of opportunities a few years ago, as you've rightly mentioned, that passive investing strategies are becoming more and more popular. People like to invest into ETFs, and this is something that investors, you know, have been wanting for quite some time. Now, a couple of things that kind of Muslim investors generally ask about or wonder with regards to Sharia compliant ETFs is that, okay, their volume is low when it's compared to popular ETFs like VU or those kind of ETFs. So if for a Muslim investor who's looking into, okay, I'm going to use the SPUS or SPTE as part of my retirement strategy, and I'd like to you know contribute on a monthly basis for years. So when he or she wants to retire and they would like to take out their money, divest from it, what kind of risk do you see with regards to this approach? I mean, the question that they ask is that if the volume is less, then does that mean when we're trying to in cash, then is that going to affect, is the share price going to come down than its net asset value? What would you have to say on that?
Okay, yeah, I understand your question and where it's coming from, and it's a very I think it's a something which obviously I like to address. The net asset value of the net asset value of NAV of an ETF is the weighted average share like asset prices of the underlying stocks. So every day, because these they trade on the market, the ETFs trade on the market, their price can fluctuate during the day, but generally the discount or premium to the NAVs is pretty minimal. Like if you look at the history of our ETFs, the average discount or premium is in a very tight band around the NAV. So, and the NAV is reset, the market price tends to follow the NAV, and the NAV is reset every day. So essentially, it cannot really fly off the NAV by a big margin. Secondly, the volume itself in the secondary market, as you indicated, the volume in the secondary market is, I think, our ETFs have very healthy volumes in the secondary market. I would say, like, I think they, lastly, when I looked at that, even the new ETF SPTE, the average volume system, like we just launched, and it's only, for example, a week or so after launch, the average shares being traded for SPTE is around 33,000 shares per day.
Wow, that's pretty impressive.
And SPUS is much higher, SPSK is much higher, SPRE is much higher, the number of shares being traded. And I don't see any reason that I have not seen, even during the height of COVID, when you would expect the liquidity to completely dry up, the trading to dry up. But even in those times, there was no dislocation which we detected in the secondary market for these ETFs, which were existing at that time. And even in the good times, bad times, they've been maintaining pretty good tight spreads. Another thing which I wanted to point out is the bid and ask spreads, basically, because if volume dries up, then bid and ask spreads tend to kind of vary a lot from each other, like they can really balloon out. if you would notice, if someone is trading these ETFs, you would have noticed that bid and ask spreads are pretty tight. It stays below 0.1% of the total. The difference between bid and ask is not more than 10 basis points. So,
Mm-hmm.
so that essentially tells you that it's a volume is tight, and everyone who can purchase, he can sell without suffering a much adverse trade at a cost, because that's where this question comes from.
Got it. Thank you for clearing that up. I mean, these are, questions that people generally ask on forums, and I've seen these, and so I thought it'll be helpful to address those, and people who are having these kind of questions will get that clarity. I basically have just two more questions.
Sure.
I know you're busy, man, and I'm sure you have a lot of things on your plate. So you are in this whole Sharia investment industry, and this is like a budding space. It's just growing, and Islamic funds are just growing right now. So what kind of challenges are you like facing managing these funds, and how are you dealing with them?
Well, because there are challenges. When we started in this space, obviously we were one of the pioneers, and being a pioneer means that have to set up the line yourself, and firstly to create structure the product correctly, which is the structure is structured in such a way that it fills the gap and the need of the investors in that space. In the Sharia compliant space, when we started, that's I think it was we were one of the pioneers, and we have to kind of discover this space as we structured these products. Although we were in the wealth management side, we were in the Sharia compliant investing for a long time, which obviously helped and mitigate any risks which are associated. Which you could see any challenges which we could see in structuring the ETFs. That was the first challenge, being the pioneer, obviously. Secondly, even among the investing community in the Sharia compliance space, we need to educate them about the exchange traded products. Although I think that because of the social media spread of social media, now people are becoming more wise in the investing, but still educating and letting the people know that these choices now, these ETFs, exchange traded products, are available for them, how to use them. So public education was the second challenge there, which we, our marketing side, reached out to the people. We tried to answer any questions very quickly. If the investor asks any question directly to us, then that's another thing. Also on the portfolio management side, that how to use these ETFs in a self-structured portfolio, that's another thought process, because some of these like it's not the investing is not about only the making quick money, it's about the long-term goals, how to use different products in the long-term goals. So these were kind of, I think, a few challenges which I think we have dealt with them, and we are in the process of dealing with them, especially in regards to the educating the share compliant investing public. Also, there was another angle to that which involves the broader community, which is not necessarily Sharia compliant. As, for example, Sukuks were the share class which fared much better compared to most of the fixed income classes, which are mainstream ones. So there is an angle there that it can be used as a diversifier in the mainstream fixed income portfolios as well. Besides, we're not limiting it to only the compliant investing public. So there's kind of diversification. So that's another angle to position these ETFs so that they can be used as a diversifier of a broad fixed income or broad equity portfolio. Because obviously, even the equity portfolios, they are not levered as the companies which are in the broad market, they are levered. So they are more susceptible, especially recent times has shown us that they are more susceptible to interest rate hikes and interest rate cycles. They come and go. But
Right.
in the long term, as our CEO Noshad once said, that it's a hedge against the leverage. So that's another part of the investing education to the broader public, that these are not necessarily only limited to the Sharia compliant public, but also it's valuable for the broader investing community as well.
That's a very interesting way to position these ETFs as well. I think because as you're rightly mentioning, this is something that not just Muslims, but everyone can actually benefit from. So that's a pretty solid one. Now, to really conclude, I would like to ask about your future ETF, which you kind of mentioned as well, that there's one coming up very quickly. And also, there have been a lot of comments, questions, and requests for ETFs that are focused on dividends. So, what would you have to say on that?
No, thank you very much. Again, this is a very, very pertinent question because one, as I said earlier, that most of our innovation was driven by the investors' need. As we interact with the retail as well as institutional investors, we come to understand that what is needed for them. Sometimes that no, those needs are expressed directly to us, but sometimes we have to assess those needs. And the products we structure, we provide this partly for the intention of filling those needs, basically, which the investing public has those needs. So our future product line is dictated by the investors themselves that what they need to structure their portfolios, individual investing needs as well. So as in, I'm, and I rather would not say that which product is coming soon enough, but there is one product which is coming soon enough, which will fill the gap in the equity space. We are currently in the U.S. equity space, so there would be there's a need for something to have an exposure to the overall asset class, equity asset class, global equity asset class. So then obviously has been some kind of demand for an active ETF as well, because if you look at the trends, there has been also a focus from the passive to the active ETFs themselves, because there's none available in the Sharia compliant quality. So there can be many other retirement products potentially there are not many retirement products available for the Sharia compliant investors, and so those retirement products is another idea. So, but it's always goes along as we receive the feedback from the investors and assess the needs of the investing public overall. We try to create the products to fill those needs. Second, just forgot second portion of your question, Fras.
Yeah. So I was mentioning about the dividend focused ETF.
Yeah.
That's something that a lot of people have been asking for, I think.
I would say that, we when we structured the REIT ETF SPRE, it had a focus basically. It was supposed to fill that need that its distribution should be higher. Its yield last month, its yield was around 4.4 some percentage points in the total distribution yield, 4.3 or something like that before it did. Probably it's gained around 10% in the last month or so. So when the price goes up, obviously the dividend yield goes down a little bit. We tend to maintain the dividends payouts or to grow them according to the growth of the income from the underlying companies. So REITs generally they have a higher payout. So this particular ETF was structured to serve as that particular need, as serve as a high dividend yielding ETF. So it was yielding around 4%, 4.25% percentage points a month ago. Still, I think it should be something around 3.75 or 3.85 right now after the gain in the last month or so.
Okay. Thank you. So, well, that was quite informative. I hope, inshallah, many people are going to benefit from this podcast. And Jazakallah khairan for taking the time out. And I wish you all the best, SP Funds and Sharia portfolio. Jazakallah khair. And I hope you continue to come up with great products for Muslims.
No, thank you very much. And I thank you for giving us the time to be and a venue to reach out to your audience and to the investing public at large. And thank you very much again. And
Jazakallah khair. Assalamu alaikum.